Hey, everybody, welcome back to our monthly market commentary. I'm Brad Gotto, founder and CEO of Fiat Wealth Management. And here with me, as always, is my partner in crime. And the reason you're all actually here, Mr. Tim Holland, the Chief Investment Officer of TownSquare Orion. Tim, good to see you, man. If this is traditionally, we have a look back, what happened the last month, a look forward, what's coming up in the coming month ahead, and then a data point worth discussing. So diving in, a look back, I'm calling this point, Tim, minus tariffs add war
Yeah,
equals down markets. Those
yeah,
are both really big points. In
yeah,
fact, the equation equals a decently big point. I don't want to overblow the fact that the markets are pulling back because it's not massive right now, but
no,
it's a blip that people are paying attention to. But let's just bite those off one at a time. Tariffs,
yeah,
pretty big news here.
yeah,
What happened?
yeah. So the Supreme Court finally weighed in on most of the tariffs that the Trump administration put in place. I say most because they only weighed in on the tariffs that were instituted under the International Emergency Economic Powers Act, the IEEPA. Most folks thought the
You
court
have that
would go.
memorized, huh? That's pretty good.
Most, but I often transpose the emergency and the economic. So you're kind. I get those wrong sometimes. So most folks thought the court would weigh in and say they went a bit too far. So all those tariffs were immediately tossed out. The administration, though, they know what they're doing. They immediately put in a across the board 10% tariff under a different legislative under a different statute. Took that to 15%. The tricky thing there is they can only keep those in place for 150
Right.
days. And so the next move would then be to sort of launch formal investigations across any number of trading partners to arrive at, if the administration has the evidence, a litany of unfair trading practices, and that would allow them to put into place more permanent tariffs. So we went from tariff certainty to a certain extent. The administration had done some deals and things were starting to create some clarity to sort of back to tariff uncertainty because folks now don't know sort of where things will land. We'll know more this summer. That's when the 150-day window closes. And then to your point, in the meantime, you have this war with Iran, which is obviously dominating the markets,
Yeah.
dominating the headlines and dominating investor interest. So I think tariffs are going to be on to the side for a bit. Look for them to come back, I think, in a big way sometime this summer.
Yeah, well, that's a great segue into that next point. We lost some tariffs, but now we're adding back a
Yeah,
war.
yeah,
And I don't want to be flippant about this conversation, but our monthly market commentaries are not intended to be long form discourse or
yeah,
complete, you know, detailed account of anything going on in the economy. And so I just want to be sensitive to the fact that it could be, there's a lot to unpack here.
yeah,
But just with the amount of time that we have, Tim, obviously a new war starts with Iran.
yeah,
Uh, it's affecting our economy in a pretty drastic way. Can you
yeah,
talk a little bit about the fallout since the war has
yeah,
started and what you're paying attention to?
yeah. So we're obviously paying attention to risk assets, and to your point, at the risk of sounding flip or different, and we're not. Markets have been super volatile, but they haven't sold off all that much. And not that money and returns are the most important thing right now. It's obviously our troops and what's going on over there. But even
Yeah,
with all the volatility in the stock market here at home and around the world, just about every major index is off less than 10% from its all-time high, and the S&P I think is off less than 5% from its all-time high. So a lot of volatility, but to your point, not much of a pullback. Obviously, the big transfer mechanism in terms of the conflict to the economy, to the markets would be the price of oil.
right.
And what's going on with crude. West Texas is over $90 a barrel. It was at 67, 68 pre-conflict. That's our benchmark. Brent is at 100. It was nowhere near 100, 12, 13 days ago. So that really is a transfer mechanism. And what's going on, as you know, is Iran doesn't pump a ton of oil. They pump, I think, a couple, 3 million barrels a day. But because of the because of the location of the country and the resources they have militarily, they can close that Strait of Hormuz, which we've talked about before.
Yep.
It's kind of essentially closed, and 20% of the world's oil ships through the strait. And so, as long as the strait is closed, you're going to have probably elevated oil prices and market volatility. The question is, how long does it stay closed? When can it reopen? And is that months down the road or a week down the road? And that window, that duration, will have a lot to do with what sort of impact the conflict has on the global economy, corporate profits, inflation, consumer sentiment. If it winds down sooner than later, the impact should be nominal. I'm not trying to, again, be flip about this. If
Yeah.
there's a way for Iran to keep that strait closed for months, which I can't believe would be possible, then it's a whole different dynamic.
Yeah. Well said. Well said. We talk about this stuff a lot in our monthly market commentaries, Tim. I just put a note out to the advisors in my office. I said, you guys just remember, this is why we build plans the way we build
Yeah,
plans.
yeah,
Not everything is sitting in long-term equity positions that are
yeah,
currently volatile. We build based on clients' needs and outcomes that they're seeking and things of that nature because it's not a matter of if
yeah,
something like a tariff pullback happens or if we end up in another war.
yeah,
It's just a matter of when, and
yeah,
we never know what's going to happen. And so there's always positives,
yeah,
right? And we're going to get to that here actually a little bit at the end when we get to the data point worth discussing. So,
yeah,
but let's look forward before then. And I'm calling this point Powell's farewell.
yeah,
You and I have probably
yeah,
I don't know how long we've been at this monthly market commentary, uh, but probably have, there's no one person, including presidents, I don't think,
yeah,
whose name has come up more than Mr. Powell in our monthly market
for sure.
commentaries and interest rates and the sensitivity around them, especially with the hyperinflation we had a couple years back.
Yep.
But it's his swan song. So
Yeah,
they got a meeting coming up here on next week, I believe.
yeah,
I I told you this. I feel like we've been watching this sitcom for years, and he's the main character of the sitcom, and they're killing him off.
yeah.
And
It's
now
like
we're all
what?
sitting here going, well, where's the storyline going to go from here?
Yeah,
You don't kill off main characters.
it's
But
like when Richie Cunningham left Happy Days to join the Army. Ron Howard wanted to go to. Again, I'm a child of the '70s, right? So you had the Fonz and you had Richie. That was the dynamic. And Ron Howard's like,
uh,
he's like 50 years old on that show, or 40, and he's like, I got to get out of this high school sweater. So he goes off and does like Far and Away and Splash and all these wonderful movies. But yeah, the way they got rid of him was Richie Cunningham joined the Army, which
yeah, see,
nobody was buying.
your reference probably lands better with the majority of our listeners than mine because what I was
Thank
going
God.
to is I think it was in season 6 or season 7 of The Office that Steve Carell left the show,
Yeah. See, there you go. That works
and
too.
yeah, but yours is probably better.
I'm a child of the
Anyway,
'70s. Yeah, no, you're
anyway,
right. So we've got the
he's
meeting
taking
next
off, and we got a
week.
meeting coming up. So talk to us about the trajectory of the Fed and kind of the
Yeah.
thought process of who's coming in.
Yep.
What does that mean for us?
Yeah, so we've got a meeting 17th and 18th, and then we have an April meeting, and then Chairman Powell's term is up end of May. So he's got 2 meetings left. Kevin Warsh has been nominated. He's a very credible nominee by the Trump administration, by President Trump to take over. There are lots. I mean, again, we live. To your point, sometimes there's nothing to talk about, and tongue in cheek. That's clearly not now because you've got Kevin Warsh, who's a very credible nominee, but you have Tom Tillis, senator from the great state of North Carolina, and some other Republicans saying, until we resolve this Department of Justice investigation into the Fed and its remodeling of its headquarters and this cost overruns, we're not going to consider Kevin Warsh's nomination. So,
Yeah,
it's big enough news when you have one Fed chair leaving and another one coming, but we're not even sure when the hearings are going to start because, and this is a Republican saying to the administration or the DOJ, let's wrap this up. So there's that. And then, most folks thought the Fed would cut 1 or 2 times this year, another quarter point cut 1 or 2 times, most likely back half of the year because with Jay Powell on his way out, they probably weren't going to do anything until
yeah,
he moved on. And lately, we've gotten some disappointing labor market data. The February jobs report was very disappointing, but now you've got the spike in the price of oil, which could bleed into broader inflation pressures and sort of reset consumer sentiment lower, but inflation expectations higher. So running the world's most important central bank is never an easy undertaking. Coming in right now is particularly difficult. Where I feel pretty good from a monetary policy point of view, the Fed's already cut almost 2 full points going back to late 2024. The labor market doesn't look great, but it doesn't seem to be collapsing. And again, if you can resolve the Iranian conflict sooner than later, especially with the production that we pull out of the ground on a daily basis, the Strategic Petroleum Reserve. You could
Yeah.
get through this without oil having a meaningful impact on inflation. But these are interesting times for all of us, including the Fed, as they look to say goodbye to Jay Powell and say hello to Kevin Warsh.
Yeah, I feel like there's a lot of dust in the air,
Yeah,
and it kind of depends where these pieces are going to fall,
yeah,
and there's going to be this, reaction, like the way that things are going to react is going to be different depending on how long the war lasts, which is going to depend on how the price of oil, which is going to depend on inflation. Then that's going to affect how the Fed
yep,
does things, and plus you have a new Fed chair coming in. And then on the back end of this, to your point, the whole tariff conversation, we only have 100, they only have 150 days with the way
yeah,
that they've chosen to kind of like band-aid
yeah,
this problem of the Supreme Court calling it unconstitutional. Like if they can't get, some of these other uncertainties kind of wrapped up, then all of a sudden that's going to rear its ugly head while we still have all these other kind of things, these balls to juggle,
yeah. It's a
or
lot.
dust in the air, like I said before. So it is interesting. It
Yeah,
is
for sure.
interesting. And the markets for sure don't like
No,
the unknown,
no.
And so the volatility, I'm sure, is going to persist. I don't
Yep,
know in what direction necessarily, because unlike most people's thought processes, volatility is both up and down.
yep,
So
yeah,
um, I I think it's likely volatility exists, and it's pretty persistent here in the short term until some of this stuff,
yeah,
we get answers, I
yeah,
guess. And
yeah,
so, but again, from a planning perspective, what does that mean for you? Your plan should be built for volatility
yeah,
and
yeah,
should be able to handle the volatility. I was just watching a video online the other day, Tim, that somebody sent me. It was a bunch. It was like at a competition. These were I think master's levels engineers in
yeah,
master school, and they had to build skyscrapers that were like 3-4 feet tall.
yeah.
An engineer, and then it was on a machine that shook it like it was an earthquake to see if their designs could
Wow.
withstand the earthquake. The majority of them failed,
Okay.
but there was a couple of them that withstood, and those team of young engineers were freaking out. That's kind of what this reminds me of.
Yeah.
If you
No,
live in
it's a
an
good
area
good
where there's
analogy. Yeah,
tectonic
go ahead.
plates, you're going to
Yeah,
have earthquakes. That's not in
yeah,
question. The question is, when do they come, kind of
yeah.
situation. So
That's a
beating
good way to
beating
frame
it,
it. Yeah,
beating the drum here really, really hard.
yeah,
But the reason being is because it's really boring to beat this drum, and the headlines are really not boring.
yeah, yeah,
uh, they're meant to not be boring, and so it's really hard to be the louder voice when
yeah,
the voice is saying, "Stay calm, stay calm, stay calm."
yeah.
Um, but that's what we're here for. A data
No,
point worth discussing. I'm calling this one a story as old as time. I
okay.
wanted to call it, I'm just going to be honest, I wanted to call it "I told you so," but that's not very nice.
No, it's
So
not.
we're going to call it a story as old as time. And really referencing kind of the market diversification, because we've got
Yeah.
some interesting stuff going on right now.
Mhm.
So talk to us a little bit about, because we've talked about pullbacks,
Yep.
and certain indices coming off their highs and things of that nature, kind of, but the whole market's not pulling back. And
Yep.
so talk to us about what is pulling back, and then what parts of the market are actually pushing forward.
Yeah. We got someone asked me the other day when things started to get really unpleasant. Said, well, how would you sort of frame this right now, or what one thing would you say to a client? And at the time, I said the S&P is not the market. Now it's the world's most
Yeah.
important index. It's what we all pay attention to, and it's now down slightly year to date after today. But if you look sort of past the S&P, small cap stocks are still flat to slightly up, and international stocks are nicely positive, even with the pullback in international markets since the Iran conflict started. So we look at the S&P on a cap weighted basis, the market capitalization weighted basis. So the bigger companies are more important. That's the one that the media reports on. But then
Yeah.
there's an equally weighted S&P where you take 500 stocks and they're all worth $1. So the Nvidia is worth as much as, say, Texas Roadhouse, a restaurant chain, and some pretty good rolls at Texas Roadhouse, from what I remember. Yeah, I can't eat those that
Great
often.
pull.
Yeah, yeah,
I
no,
like the
TX,
opposite end of the barbell.
yeah, TXRH is the ticker. I think it's been a long time. And the equal weighted S&P 500 index is up a couple 3% because other stuff is working. So,
Yeah.
and it's not just overseas doing better. There's small caps and again, sort of mid caps and value stocks are doing better. Energy, materials, And so if you want to be, again, set aside this awful conflict, because you've been in the markets a long time. I've been doing this for a bit too, and I just, the market's going to be a lot smarter than I am or I will ever be. And, if you go back pre-Iran conflict, a lot of people were worried about AI and how AI was going to disrupt Salesforce and these other software stocks. You saw a lot
Yeah.
of volatility, and folks have kind of moved on from that, understandably so, because they're paying attention to the war in the Middle East. But not to be flip about anything selling off, the way I explained it to some folks on our team, you've had a phenomenal run for technology stocks the last 5, 6, 7 years in particular, the Mag 7 becoming the Mag 7. If you can kind of go through this period where the S&P is flat to up a little bit, down a little bit, but underneath the hood, some of these stocks that are fantastic companies that are maybe a little too expensive kind of go sideways to down. You kind of reset
Yeah.
expectations and sentiment. And in the meantime, the broader market actually hangs in there. And then pieces of that broader market are actually up 5, 10%. If that's how you work off of some excess that some people saw in those large cap tech names, that's a wonderful outcome. I'm not rooting
Yeah.
for anything, so there is a lot of good stuff, even with all the volatility and uncertainty. And one of the things I take comfort in is that you've seen the market broaden out, you've seen other sectors catch a bid, and you've seen the world's largest, most important companies struggle because people moved away from tech, but that's not pulling everything down with it. And I kind of see that, knock on wood, as a very healthy development under the hood. Again, to your point, it speaks to diversified portfolios. Most diversified portfolios are flat to up still
Yep.
year to date. And so kind of like, I told you so, but you were right, and that's just a better way to build that mousetrap, and it's really shining through right now, I think.
Yeah. I mean, if your overall plan in the piles of money that you've saved are for
Yeah.
the purposes and of your life and outcomes and spending and retirement and those sorts of things, it's not about chasing rate of return. And
Yeah.
the problem is when you chase rate of return, what happens is what you would have been chasing recently,
Yeah.
all the tech, is what's actually pulled back, and what you would have sold out of to chase that is all the stuff that is up.
Yep.
Um, but that's the way it tends to go.
Yeah.
When you look at all these different asset classes, the asset classes that we've basically, till we were blue in the face, been trying to convince clients to stay the game, stay the course, stay the game.
Yeah.
They're like, yeah, but this part of my portfolio has really stunk the last
Yeah.
handful of years. I know.
Yeah.
Beating that boring drum again.
Yeah.
Now that's the part that is propping things up. I do have to end with this though, because I
Yeah.
just think it's funny. Because
Yeah.
you made a comment of, and I don't mean anything by this, I just think it's
Yeah.
funny. You made a comment that they're pulling money out of tech. Well, what's the number one reason people are pulling money out of tech? The fear about AI,
Yeah.
which is tech. They're leaving tech because of tech. Like,
Yeah.
it's, I mean, you can't make it up.
No, it's somewhat ironic that there was a lot of talk about an AI bubble, and we've talked about this a lot the last couple of years. If the
Yeah,
Nvidias of the world and the hyperscalers are spending all this money, they're wasting it. Their stock prices are too high, and that is a bubble and it's going to pop. And somewhat ironically, the most pain within tech has not been within the AI space per se, but people worried about AI disintermediating or disrupting other parts of tech. We've spent a lot of time looking at that as well. We're going to be putting out some new content along those lines. My 2 cents is those mission critical software companies and systems. I'm no technologist. I'm a CIO, chief
yeah,
investment officer, not chief information officer. Ripping those systems out of Fortune 500 global market cap multinational companies is not something people do. They're too mission critical. The regulatory and legal and compliance risks are too great. So just, again, that's how we're kind of thinking about that. But you're right, it is kind of funny. It's kind of ironic where the AI bubble ended up
yeah.
kind of being at least short term.
Yeah. Really good stuff, Tim. Thank you as always. There's obviously a
Yeah,
lot going on. And again, we try to have fun. I don't want to be, again,
yeah,
don't want to be flippant about what's going on in the world. I do want to just let all of you know that I know we only do this once a month, but we are watching what's going on and paying attention. And so I have a feeling, this isn't a promise, I have a feeling you'll probably see another update from us before we get another 30 days out, just as we continue
Yeah.
to watch what's going on. So kind of look for that in your email inboxes. If you tend to not open all of our newsletters, but look for these monthly market commentaries, I would pay attention because it doesn't necessarily mean it's going to come in video format or that Tim and I are going to be presenting it necessarily. But I just want you guys all to know that it is something we've gotten questions on it.
Yeah.
And so we're staying on top of it. So long story short, Tim, especially in times like this, I know your time is always valuable, but even more now than normal. So appreciate you being with us,
Yeah.
and we'll see you back in April.
Yeah. Good to be with you, Brad.